DraftKings just broke out from a potential stage 1 accumulation. Really quick, I'm going to make this video and show you guys exactly what we're looking at in DraftKings. We already have guys inside of DraftKings, inside of TTI. A couple guys are in shares. We have a couple guys that are in contracts. I'm going to go ahead and break down the actual play and show you what you can do moving forward to try to catch a piece of this DraftKings move. First off, I just want to quickly review the stage theory here. It's not Stan Weinstein's own creation. He obviously improved upon the Wyckoff market model, but essentially it's very easy to see once you understand what he's looking for when he goes to describe these stages in the market. First off, DraftKings IPOs and immediately enters a stage 2 advancing sort of price action. This is characterized by higher highs, higher lows. This is what bulls want to see, right? Then we go back and we see a distribution phase where we see a topping out process. Essentially what this is larger institutions offloading their shares, and price stops moving up because there's increased selling pressure, right? We see a Pico top, and then we see some sort of horizontal channel. Generally, it's going to look something like this. Almost all charts go through this sort of, topping out phase, and you can identify these and potentially save yourself some trouble if you can sell your shares or close your positions or initiate shorts on the neckline breakdown. Next, we get a stage 4 declining phase, which is obviously a classic downtrend. It's not generally going to be a nice staircase. It's going to be a capitulation, which you see right here. Very oftentimes we see capitulations in the form of elevators down, right? Staircase up, elevator down. And then we get, once again, the classic accumulation sort of price action, which is the exact opposite of distribution. It's the exact same horizontal channel, but instead of at the top of a advancing price action, it's at the bottom of a declining. And what is this? Essentially, we can think of this as institutions, retail, etc., accumulating a larger position. Obviously, we're not able to break because of market conditions, but it's held within a very tight range here. In terms of DraftKings, it's $10 to the upside and around $20 to the downside. We see very tightly wound up price action here in DraftKings going all the way back 482 days. So it's almost a 500-day base where people are accumulating shares within this company. What happens when finally we get a catalyst and market conditions improve? We see the breakout. What happens after we get a breakout in stage 1 accumulation? We get the classic stage 2 advancing. It's the exact same price patterns over and over and over. We can positively identify these, right? So there's a few things inside of TTI that we look for on top of this type of price action. We want to see price trading above the 200-day moving average, which it is. We want to see the 200-day moving average sloping to the upside, which it is. We want to see RSI trending above the 50, which shows us that there is positive bullish momentum, which it is, going all the way back to the beginning of the year. So that's 5 months now. For whatever reason, the market did not want to sell this off as it was coming down. We look at that and we go, man, if we want to buy this thing, this is great supporting evidence. 4.3 ADR means that this thing moves. We're not going to get stuck with a slow trade. This thing will be able to pay us relatively quickly. And we get the VRVP here, and we can see at what different price points volume was actually kicked up on the chart. We can see that there was an incredible amount of volume during the accumulation phase, which is what you want. It's one of the determining factors in, is this an actual accumulation phase? And then you get essentially no volume all the way up to about $50. We expect that as DraftKings breaks out of this stage 1 accumulation, based off of this current catalyst, the ER, we expect inside of TTI that as DraftKings breaks out because of the ER, if we can hold the $20 level, which was previous resistance, now turned support, that we will be advancing and we will be looking for something, some sort of price action pushing up towards the 50 relatively quickly, right? Relatively quickly being, it could be weeks, it could be a month or two, but we're swing traders, so that is relatively quickly for us. Really quick, just to show you guys something, we can actually come up with a trade idea here just to see, basic risk to reward, etc. Right? We can look at the $20 area. Actually, we'll say $22 for the breakout, and we'll put the bottom of the range here at 954. This gives us an awesome opportunity for, if you're a shares trader, to grab at least a 3-to-1, right? We want to be able to grab this 3-to-1 setup nearly every single time. If you can grab 4-to-1, 5-to-1, even better. But this will give you damn near a 3-to-1 every single time. So $22 breakout with a $30-ish price target and a 1950-ish stop out. This will give us almost every single time nearly exactly a 3-to-1, and I can prove it. Let's go ahead and throw the long position chart on here, and we can see, let's drag this down to the price target. That's a 3.12 risk to reward every single time. Now, does that make sense? If we look at the recent price action, rather, $22, we get a pullback, we can enter. Yep, we can actually probably tighten up the stop loss a little bit to make it right underneath this oscillation low, and you don't have to sell at 30, but this would be a great place to move stops up aggressively and continue the trend to the upside. Like I said, there is a VRVP low volume node all the way up to 50. And so you might want to try to stay in this a little longer, assuming market conditions continue to improve. Last thing I want to say is if you're an options trader, if you look at the options chain, the Septembers have an incredible amount of liquidity, right? And it's cheap. It's a 70 IV rank with a 4.9 IVR, meaning it's really up to you whether or not you want to buy straight calls or potentially a call debit spread. Right now, the chain is slammed at 35. You can't go any farther out than that on the Septembers and the Octobers, which opens up a unique opportunity. If you like DraftKings, we can go ahead and spread the 30-35s, and this is going to give us, at market open, right now we're trading for $46 with a max profit of 454, almost a 10-1. That is not going to change, or that is not going to remain, rather. That will change off of market open, but you should be able to look at something like a 30-35 call debit spread for September 15th for about $1 with a max profit of 4. That's a 4-1 setup, right? If you're already back here on the chart and you're looking at the $30 area, well, if you're an options trader, that 30-35 call debit spread allows you to capture that $30 price target with the 4-1 setup on the chain. If you want to go a little bit further out, feel free. Just be careful about buying straight calls because this is a higher IV name, and so you will be looking for IV expansion or, in order to continue to press the premium in those contracts. If there is no IV expansion through the rest of the move, you could see some hindered premium there as IV looks to contract. So that call debit spread is going to allow you to stay in the trade a little bit longer, a little bit easier. It's not necessarily going to be more profitable, but it will be less stressful because you don't have to worry about that IV contracting. All right, so there's an entire play. DraftKings 3-1 setup or more. If you're trading equities, a 4-1 setup or more. If you're trading options, here's the exact reason why we like it. We didn't even go through sector industry, but you do have that on the backside as well. I hope this helps.